Hey everyone, today we're going to break down a really simple but honestly super powerful trading technique called Heiken Ashi. If you've ever just stared at your charts feeling completely overwhelmed, then stick around. This one's definitely for you. Let's get right into it.
So, does this look familiar? You know, that sea of flickering red and green bars, dozens of patterns you're supposed to remember, and just so many signals that you have no idea when to actually pull the trigger. It's a massive headache for a lot of traders, for sure.
Oh, and what about this nightmare scenario? You finally get into a good trade, right? It's moving your way, you're feeling good, and then one little scary-looking candle pops up, you panic and you get out, only to watch the thing take off without you. Man, that is just the worst feeling.
You know, these two problems, they lead to something traders know all too well, analysis paralysis. It's that feeling of being totally frozen, just staring at the screen, trying to make sense of every single little tick and flicker.
And here's the thing, that hesitation, it isn't just stressful, it costs you money. Plain and simple. It means missed trades, bad entries, and it just eats away at your profits over time. But what if there was a way to just filter out all that noise?
Well, guess what? There is. And that's where Heiken Ashi comes in. It's this really elegant solution designed to do one thing: smooth out all that chaotic price action and just bring some clarity back to your charts.
So this technique actually comes from Japan, way back in the 1700s, and the name Heiken Ashi literally translates to average bar. And that's the perfect description, really. It uses a special formula to average out the price data. And the result? All that choppy market noise gets filtered out, making the real underlying trend way easier to see.
Okay, check this out. This is the perfect comparison. On the left, you've got your standard traditional candlesticks. You see how choppy and erratic they look? All that noise. Now look to the right. That's Heiken Ashi. See how much cleaner, how much smoother that is? It's like night and day. This picture really shows you the main benefit. It helps you see the actual trend, not just all the little moments of panic.
Now, I know what you might be thinking. There must be some complicated math behind this, right? Well, there is a formula, but, and this is the best part, you don't need to memorize it. Seriously, the source material is super clear about this. Knowing the formula isn't going to make you a dime. So we're going to skip the math and focus on what actually matters: how to read the chart.
So how do we actually use this thing? Well, instead of trying to memorize, dozens of candlestick patterns with crazy names, Heiken Ashi boils it all down to just three. That's right, three simple signals you need to look for.
All right, first up, we have the bullish bar. Think of this as your big green light for strong upward momentum. It's super clean, super simple, and tells a very clear story.
So here's what you're looking for. It's going to have a green or white body and a wick sticking out the top. But listen up, this is the most important part. There is no wick at the bottom. None. When you see that, it's screaming at you that the buyers are totally in control.
Okay, next up, you guessed it, the exact opposite, the bearish bar. This is your signal for some serious downward momentum. This one's going to have a red or black body with a wick pointing down. And again, the key detail, the thing you have to look for, is that there's no wick at the top. When you see this pattern, it means the sellers are running the shell. And finally, our third and last pattern is the indecision bar. This is kind of like your yellow light. It's a heads up that a strong trend might be taking a breather, or maybe even getting ready to turn around.
With this one, don't even worry about the color. It can be green or red. The only thing that matters is that it has wicks on both the top and the bottom. When you see that, it's a sign of a tug of war. Buyers and sellers are fighting it out, and nobody's really winning. It's pure uncertainty.
Okay, so we've got our three signals. That's great. But how do we actually turn this into a trading strategy, with actual rules for when to get in and when to get out?
But hold on. Before we go any further, I have to give you a really important warning, and this comes straight from the source material. Heiken Ashi is an awesome tool, but it is not a magic crystal ball. You can't just buy every green bar and sell every red one. If you do that, you will lose money, period. These signals need context.
So here's the checklist for taking a long or a buy trade. Step 1, you need to confirm the main trend is up on a higher time frame. Think daily chart. Step 2, we're going to use two moving averages, the 10 and the 30 EMA. You need to see that the faster 10 EMA is above the slower 30 EMA. Step 3, now you wait. Be patient. Wait for the price to pull back and touch those moving averages. And finally, step 4, you pull the trigger and go long at the close of the very first bullish Heiken Ashi bar you see.
And for a short or a sell trade, you just flip everything on its head. Confirm the big trend is down. Make sure the 10 EMA is below the 30. Wait for price to pull back up to them, and then you enter short at the close of that first bearish Heiken Ashi bar. See? It's a nice mechanical system.
Now this is where the real beauty of this system comes in, the exit. It takes all the emotion out of it. If you're in a long trade, you just sit back and you hold on through all the little ups and downs until you see the first bearish Heiken Ashi bar close. That's it. That's your signal to exit. And if you're short, you just wait for the first bullish bar to close. No more guessing, no more panic selling.
All right, that's enough talk. Let's look at some real charts. We're going to walk through a couple of examples right from the source material so you can see exactly how this works in the real world. Okay, so let's look at this short trade. The market was already in a downtrend, and you can see it pulled back right to the moving averages. Bam! There's our signal, that first bearish Heiken Ashi bar. That's the entry. Then the rules say to just hold on, even through those little indecision bars. And the exit? It doesn't come until the very first bullish bar closes. It's a perfect, by-the-book example.
Now, let's look at a long trade. Here, the price came down and bounced right off that 10 EMA. Then, we got our signal, that nice bullish Heiken Ashi bar. That's the entry. The trade moves up nicely, and the exit happens right when that first bearish bar closes. Now, the source makes a really important point here. Did this trade catch the entire monster move? No, and that's totally fine. The goal isn't to be a hero and catch every single pip. The goal is to be consistently profitable, trade after trade.
So when you boil it all down, Heiken Ashi just simplifies things. It smooths out the chart, it cuts out the noise, and it gives you a clear, rule-based way to get in and get out of trades. And that really leaves us with one big question for you to think about. By taking all that noise and emotion out of the equation, could a simple system like this be the key to finally improving your trading discipline?